Hello, I'm Sue Zorman, and today we're going to dive into some essential tips for financial success. We're going to talk about taking control of your money, making it work for you, and building a secure future. Because let's face it, financial literacy is not just about numbers, it's about empowerment. It's about having the knowledge and the tools to make smart choices that align with your values and dreams. Whether you're just starting out or looking to get back on track, these tips will provide a solid foundation for a brighter financial future. So let's get started on this journey together. Before you can even think about making a budget or investing, you need to know what you're working towards. What are your financial dreams? Do you want to buy a house, retire early, travel the world? Write these goals down, make them as specific as possible. Instead of saying I want to retire early, say I want to retire at 55 and travel to Europe for 6 months. See the difference? When you have a clear picture of what you want, it's easier to stay motivated and make the necessary sacrifices. Now, once you have your long-term goals, break them down into smaller, more manageable steps. If you want to buy a house in 5 years, how much do you need for a down payment? How much do you need to save each month to reach that goal? Remember, your goals are personal to you. Don't compare your dreams to someone else's. Focus on what's important to you and create a plan to achieve it. It's also important to be realistic. Don't set yourself up for failure by setting unrealistic goals. Start small, build momentum, and celebrate your successes along the way. And don't be afraid to adjust your goals as your life changes. Life throws curveballs, and your financial goals need to be flexible enough to adapt. The key is to have a plan, to review it regularly, and to make adjustments as needed. So take some time to think about what you truly want to achieve financially. Write it down, break it down, and let those goals guide your financial decisions. Remember, you are in control of your financial destiny. Take charge, dream big, and start building the future you deserve. Now let's talk about the B word, budget. I know, it sounds scary, restrictive, but trust me, it's your financial freedom plan in disguise. A budget isn't about depriving yourself, it's about awareness and making conscious choices with your money. The first step is to track your spending. Use a notebook, a spreadsheet, or one of the many budgeting apps available. Categorize your expenses: housing, transportation, food, entertainment. You get the idea. Do this for a couple of months to get a clear picture of where your money is going. You might be surprised by what you find. Once you have a handle on your spending, you can start creating your budget. Begin with your essential expenses: rent or mortgage, utilities, groceries, debt payments. Then allocate funds for your goals, that down payment, that dream vacation, or your retirement savings. And finally, factor in some fun money. Yes, you heard me right. Depriving yourself completely will only lead to burnout. Allow yourself a small amount for things you enjoy. Now, the key to a successful budget is to be realistic. Don't create a budget that's so restrictive you'll never stick to it. Start small, make gradual adjustments, and find what works best for you. Remember, it's a marathon, not a sprint. And don't be afraid to revisit and revise your budget as needed. Life changes, your income might change, your goals might evolve. Your budget should be a living document that reflects your current financial situation. So take control of your finances, create that budget, and watch your financial confidence soar. Debt can feel like a heavy weight holding you back from your financial goals. But don't worry, we're going to tackle it head on. The first step is to acknowledge and accept your debt. Don't bury your head in the sand. Gather all your statements, write down the balances and interest rates. This is your starting point. Next, make a plan to pay off your debt strategically. There are two popular methods, the snowball method and the avalanche method. With the snowball method, you focus on paying off the smallest debt first, regardless of the interest rate, to gain momentum and motivation. The avalanche method, on the other hand, prioritizes the debt with the highest interest rate, saving you money in the long run. Choose the method that resonates with you and stick to it. Now, while you're diligently paying down your debt, it's crucial to avoid accumulating more. Put those credit cards away if you have to, freeze them in a block of ice. Resist the temptation to make impulse purchases. Ask yourself, do I really need this or can I live without it? Consider ways to increase your income to accelerate your debt repayment. Could you take on a side hustle? Sell some unwanted items? Every little bit helps. Remember, becoming debt-free is a journey, not a race. There will be setbacks, but don't let them discourage you. Stay focused, stay disciplined, and celebrate every milestone along the way. Imagine the feeling of freedom and peace of mind that comes with being debt-free. You can do this. Take charge, make a plan, and break free from the chains of debt. Life is full of surprises, and unfortunately, not all of them are pleasant. That's where your emergency fund comes in, your financial safety net for unexpected events. Think of it as your financial peace of mind. An emergency fund is not your vacation fund or your new shoe fund. It's for those unexpected expenses that life throws your way. A medical bill, a car repair, a job loss. Having this fund means you won't have to go into debt or tap into your long-term savings when these events occur. So, how much should you have in your emergency fund? Ideally, 3 to 6 months worth of living expenses. I know that sounds like a lot, but start small. Even $500 is better than nothing. Set a realistic savings goal and automate your contributions. Treat it like a non-negotiable expense. Now, where should you keep your emergency fund? You want it to be easily accessible, so a high-yield savings account or a money market account is a good option. Avoid investing this money in the stock market, as you don't want it subject to market fluctuations. Remember, your emergency fund is there to protect you, to give you peace of mind, knowing that you can handle whatever life throws your way. It's your financial security blanket. So start building yours today, even if it's just a few dollars at a time. You'll thank yourself later. Investing. It might seem intimidating at first, but trust me, it's one of the most powerful tools for building long-term wealth. You don't need to be a Wall Street whiz to get started. Remember, the best time to plant a tree was 20 years ago. The second best time is today. So let's break down the basics. First, what is investing? Simply put, it's putting your money to work for you by purchasing assets that have the potential to grow in value over time. Think of it as planting seeds that will grow into a money tree. Now, there are various investment options, but for beginners, let's focus on two popular choices: stocks and bonds. Stocks represent ownership in a company. When you buy a stock, you're buying a tiny piece of that company. Bonds, on the other hand, are like loans you give to a company or the government. They typically offer lower returns than stocks, but are generally considered less risky. The key to successful investing is diversification. Don't put all your eggs in one basket. Spread your investments across different asset classes, stocks, bonds, real estate, to reduce risk. One of the easiest ways to start investing is through mutual funds or exchange-traded funds, ETFs. These are baskets of stocks or bonds that allow you to invest in a diversified portfolio with a single purchase. Remember, investing is a long-term game. Don't panic sell when the market fluctuates. Ride out the waves, stay focused on your goals, and over time, your investments will grow. Before making any investment decisions, do your research or consult with a financial advisor. Educate yourself, start small, and watch your money grow. Every day, we're bombarded with financial decisions, big and small. From choosing a credit card to buying a car, these choices can have a significant impact on our financial well-being. So how can we make smart decisions that align with our goals and values? First and foremost, avoid making decisions based on emotions. Fear and greed can lead to impulsive choices that you might regret later. Take your time, weigh your options, and make rational decisions. Secondly, do your research. Don't just jump on the latest financial bandwagon. Understand the risks and potential rewards before investing your hard-earned money. Read reviews, compare products and services, and don't be afraid to ask questions. Thirdly, consider the opportunity cost. Every financial decision you make comes with an opportunity cost. For example, if you choose to buy that expensive gadget, you might be sacrificing your ability to save for a down payment on a house. Think about what's most important to you and make choices that align with your priorities. Fourthly, seek professional advice when needed. Don't be afraid to consult with a financial advisor, especially for major financial decisions. They can provide personalized guidance and help you navigate complex financial matters. Remember, making smart financial decisions is about taking control of your finances, making informed choices, and building a secure future for yourself and your loved ones. It's about aligning your spending and saving habits with your values and goals. So, take your time, do your research, and make decisions that empower you to achieve your financial dreams. In today's digital age, we have an abundance of financial tools and apps at our fingertips, designed to simplify our financial lives and empower us to make smarter decisions. From budgeting apps to investment platforms, these tools can be invaluable allies on your journey to financial success. One category of apps that can be incredibly helpful is budgeting and expense tracking apps. These apps connect to your bank accounts and credit cards, automatically categorizing your transactions and providing you with a clear picture of your spending habits. Many of them also allow you to set budgets, track your progress, and receive alerts when you're nearing your limits. Another type of app that can be incredibly beneficial is investment apps. These platforms make investing accessible to everyone, regardless of experience or income level. Many of them offer low fees, diversified investment options, and even robo-advisors that provide automated investment advice based on your goals and risk tolerance. In addition to budgeting and investment apps, there are also apps designed to help you manage your debt, track your credit score, monitor your net worth, and even save automatically. The key is to find the tools that best suit your needs and integrate them into your financial routine. Don't be afraid to experiment with different apps until you find the ones that you're most comfortable with. Remember, technology can be a powerful ally in your quest for financial well-being. Embrace these tools, leverage their capabilities, and watch as they simplify your financial life and empower you to make smarter decisions. Retirement might seem like a lifetime away, but trust me, it sneaks up on you faster than you think. The sooner you start planning, the better prepared you'll be to enjoy your golden years without financial worries. The first step is to envision your ideal retirement. Where do you see yourself living? What activities do you want to pursue? Having a clear picture of your retirement aspirations will help you determine how much money you'll need to fund your dreams. Once you have an idea of your retirement expenses, you can start calculating how much you need to save. There are numerous online retirement calculators that can help you estimate your savings needs based on factors such as your age, income, and desired retirement lifestyle. Next, explore different retirement savings plans. If your employer offers a 401k or 403b plan, take advantage of it, especially if they match your contributions. It's free money, people. If you're self-employed or your employer doesn't offer a retirement plan, consider opening an individual retirement account, IRA. The key is to start saving early and consistently. The power of compound interest is magical. The earlier you start, the more time your money has to grow. Remember, retirement planning is not just about saving money, it's also about protecting your assets. Ensure you have adequate insurance coverage, including health insurance, long-term care insurance, and life insurance. Planning for retirement and beyond is about taking control of your financial future and ensuring that you can live your desired lifestyle during your golden years. Start early, save consistently, and enjoy the peace of mind that comes with knowing you're financially prepared for whatever the future holds. We've covered a lot of ground today, from setting financial goals to planning for retirement. Remember, financial success is not a destination, it's a journey. It's about making conscious choices, developing healthy financial habits, and taking control of your financial well-being. Let's recap the key takeaways. First, define your financial goals. What do you want to achieve with your money? Having clear goals will provide direction and motivation as you navigate your financial journey. Second, create a realistic budget. Tracking your income and expenses is crucial for understanding your cash flow and identifying areas where you can save. Third, prioritize debt reduction. High-interest debt can be a major obstacle to financial freedom. Develop a plan to pay off your debt strategically and avoid accumulating new ones. Fourth, build an emergency fund. Life is unpredictable, and having a financial safety net will protect you from unexpected expenses. Fifth, start investing early and consistently. The power of compound interest is on your side. The sooner you start investing, the more time your money has to grow. Sixth, make smart financial decisions. Avoid impulsive choices and take the time to research your options before making significant financial commitments. Seventh, utilize financial tools and apps. Technology can simplify your financial life and empower you to make more informed decisions. And finally, plan for the future, including retirement. It's never too early to start saving for your golden years. Remember, your financial journey is unique. There's no one-size-fits-all approach. The key is to find what works best for you, develop healthy financial habits, and stay committed to your goals. Remember, your financial journey is unique, and taking these steps will help you build a strong foundation. Start today and take control of your financial future. It's about making conscious choices that align with your values and goals, and it's about having the confidence to achieve your financial dreams. I believe in each and every one of you. If you found these tips helpful, be sure to subscribe to my channel for more financial advice and inspiration. Together, let's build a brighter financial future.